Just give me a minute. I'm just trying to put on my Instagram. And my Blu-ray glasses. So if you see me looking to the side, it's just that I have screens on the left and on the right of my laptop. So that's usually why. Okay, I think we're good to go. Instagram, ready, live. Boom. Cool. Yeah, good evening, everyone. Welcome to Crypto Pulse Weekly. Tonight, I'm going to be quite brief as much as possible because I'm moving houses, so my whole house is in disarray, and I just had to sneak out into the study to do this live. Anyways, welcome to Crypto Pulse Weekly. Today I'm talking about the newly approved Bitcoin futures leverage ETF. So the other time I was talking about the application by BlackRock for Bitcoin ETF. Now, that ETF was really a spot ETF that they applied for. But I think somewhere in the mix, there was also an application for a futures leveraged ETF. It's essentially a 2x leverage ETF. And that is what got approved. And I'm not sure that's why people are getting it confused and the market is pumping. But really, that one is it's not really Bitcoin. How do I put it? It's not really Bitcoin spots. So you don't have to settle in Bitcoin. So let me explain the way leveraged ETFs work, or ETF generally. So if you have an ETF that is leveraged and is futures based, what it means is that anything that is futures based is like trading in Forex or trading in commodities. It is essentially treated as a commodity. It can be reverse manipulated by the market makers and the government because essentially you don't need to settle in the primary commodity itself. The primary commodity in this case is Bitcoin, and because it's not a Bitcoin spot exchange traded fund, they don't need to settle in Bitcoin. As a result, it really does not affect the demand and supply of Bitcoin directly. Why am I saying this and why is this important? I will explain it to you. So the originators of Bitcoin are set it up in such a way that the supply can't increase. Even though I'm having doubts, and you know, I'm just implying to everybody, I'm having doubts now that there won't come another set of developers is instigated by the big investors and the big money marketers to change the code of Bitcoin to allow issuance beyond the originally defined 21 million Bitcoin. It's a theoretical, hypothesis that might change in the future. So some people might vote to, change Bitcoin and increase the circulating supply by more than 21 million. But as of now, of course, that has not come into play. But what is coming into play is that more and more upgrades are being added to the network that I think potentially may compromise the network maybe in another 20, 30 years. I mean, it doesn't remove the store of value capacity or the capability, but the control of supply, which is really what global macroeconomics is about, is the control of supply. All the wars in the world is about control of supply. all the wars. You can, you can determine the supply of what or where, but all the wars that have been fought, both presently, in the past, and probably in the future, is about control. You might say, okay, maybe it's not control of supply, but it is all about control. Now, what Bitcoin was seeking to do is to democratize capital. Democratization of capital, like I always said, meaning, anybody can own their own money. The way it is now, nobody owns anything really, because the money we're spending is owned by the central bank of whichever country is printed on it, and that money is only backed by the government of that country. If the government of that country fails, or its economy fails, then the money fails. So this Bitcoin story, it's the core reason why it's so difficult to get Bitcoin spot approval in the United States, because it becomes a direct competition with the dollar. Direct competition. How, you may say, if you approve an ETF for spots for Bitcoin, which is settled in Bitcoin, what it means is that if BlackRock or the likes of BlackRock or some big sovereign wealth are like massively capitalized to 20s and tens and 20s of trillions. If they say they want to bring in, let's say, $5 trillion into the market capitalization of Bitcoin, what it means is that the price will go up astronomically. They don't want that because they won't be able to buy any of such important commodities for cheap. As a result of that, there will be scheming on the left and on the right, and the front and on the back, to make sure that they can buy the commodity for cheap. So when you look at every important commodity in the world and the market players are controlling those commodities, you find out that the bigger players are always looking to buy it for cheap. Always. Not just looking to, always making sure that they create an environment to buy it for cheap. No, I'm not on a session to bash, Western world. I think Africa has had its turn in terms of rulership of the world for many, many thousand years. So I'm not trying to bash the Western world. But what is obvious is that anytime you have a commodity and the commodity is of interest, automatically the people who are the bigger players will want to find a way to ensure that they create a channel to get it for cheap. I can start from, we can start from diamond to lithium to even cocoa. I mean, I don't know if you heard that story about Ghana and the president of Switzerland when they were discussing about cocoa and chocolates. And, the guy went on a brazen assault and, basically just ranted on the global stage. And what happened? 6 months down the line, Ghana is declared broke. It's not coincidence, by the way. And it's not that Ghana doesn't have money or that Ghana doesn't have resources. But understand that bigger players would never want to obtain commodities at a higher price or at a fair price, not even a higher price, at a fair price to the market. So they will create an environment to make sure that they can get it at below markets to, obtain supernormal profits. So that's exactly what I think is happening here by the creation of this ETF. So the market's pumped down, it's gone to 31,000 and back. I think we're going to see 20,000. I'm not being a prophet of doom, though. I think I've seen this movie before. And unless, of course, the whales, the original Bitcoin whales, starts coming into the market, which is a bit premature, considering that halving is next year, April. It's a bit premature for them to come in now. Usually what happens is they come in the run-up to the halving, then when the price drop, they double down on their positions. So once the price drops after halving, and then the price starts to climb, and they pump the market till the end of the cycle. So I am not too convinced about this boom. And the fact that it's we've not seen the return leg. So yes, it's an uptrend. It's oversold even on the daily right now. It's in the overbought region. Sorry, from a technical standpoint. So when the noise of the ETF calms down and people are actually able to understand what it means, then we might have another wave of sell-off. Currently, it looks like, the setup is invalidated, but I think I've seen it many, many times where the setup looks like it's invalidated technically, and then it goes in the original direction that you had forecasted it was going. So I still think 24,000, 35,000 is in play at the minimum. I think that might be the next bottom, or I think that might be the next bottom. If it's not the next bottom, I'll be very surprised. But let's wait and see what it looks like. But in terms of what the ETF is, the ETF is a leverage exchange interest and exchange traded funds that allows you to take position on the price of Bitcoin, not on Bitcoin itself. It's just on the price of Bitcoin. It's almost like a 2x leverage forex trading that allows you to buy or sell on the price of Bitcoin. So what it means is that big money can make bigger bets now on the price of Bitcoin legitimately in the United States. Before now, it was what's called dollar settled. It was dollar settled futures that was on CME for Bitcoin. So now that you have these ETFs, and because ETFs are they're more secure, they're more, how do I put it, sophisticated securities for institutional investors. So you're going to see a bigger play of investors in the coming cycle. On the macro, of course, you probably heard, that interest rates have gone up again in England. It's probably the highest in more than 10 years. Definitely the highest in more than 10 years or more. And what this means is that this is just a microcosm of what should have been playing out in the US. But I think the US bankers and the Feds, and probably the market itself, because the market is quite big in the US, it has not allowed this scenario, which we're seeing now, to play out in the US. This was a scenario that was forecasted that would play out, meaning inflation will keep going and raging strong, and then interest rates will keep going because they will need to do something to interest rates. I mean, they will need to do something to inflation. So increasing interest rates is an attempt to curb inflation. They will only stop, at least for the UK, they will only stop when it starts to affect housing, which is on the verge, but it's not there yet. When it starts to affect housing, then it will show on the economy significantly. At that point in time, inflation will have calmed down. So on a general point, I don't think that the ETF is going to add to the use case of Bitcoin. I think it's going to pump the markets significantly when the cycle begins. I think you will see major market movements. I mean, what was that? Thursday? No. It was Tuesday. It was Tuesday or Wednesday when someone was saying that there was a price spike on Binance US platform. There was a price spike of Binance US platform to $138,000 Bitcoin. That platform is a funny platform because it doesn't have, Binance US, it doesn't have as much liquidity, of course, far more liquidity. Liquidity is far lesser than what you have in the major Binance platform. But you can see some market direction. You can get idea of some market direction from some of the dips that you get. So you have some week down or week up candles that show up on their charts that tells you an indication where the market makers have their mind. So when I saw that, I said, okay, maybe that's likely to be the peak of the next cycle. Because when the price started, to give you a reference, when the price started dropping in November, I think, of 2021, there was a spike on the Binance US platform. I remember very vividly. And that spike, I think, went down to the 20s. And everybody was like, oh, what happened and all that. Of course, we eventually found the market at that level many months later. So I think it's an indication of what to expect in terms of peak price. Definitely, I think Bitcoin will top 100K effortlessly in the next bull run, at the minimum 120. I mean, don't quote me, from the bands of what's possible technically is anywhere between 99 and 140. I think that's a fair bet. Once it crosses 100, there'll be a lot of noise that Bitcoin is going to 200. I don't think it's going to make it to 200, but definitely Bitcoin will definitely go above 100. So in terms of what the price looks like, yeah, it's broken structure. It looks like the channel down is broken, and technically you expect an upward movement, but Bitcoin sometimes doesn't follow technical. To be honest, sometimes it just goes and does its own stuff. But right now, I think the price is going to start coming down because this is an unhealthy progression. What I mean, a healthy progression is it's just gone up straight up. It's almost parabolic. So the market needs to correct for this progression, and the correction can be as as draft, what's it called, rapid and swift as the impulse, and it can take its time and cool down. But as far as this is concerned, on the intraday level, Bitcoin is oversold because today is Friday, and there is room for more pumps over the weekend. There are two things. If market makers see that there's a lot of demand to go upwards, they can create a bull trap at the top of this price range, which will essentially take us to maybe like 32 or 31,900. And then once that bull trap is in place, because then if it keeps going on like this and it goes up to 32K, everybody will say, oh yeah, we're in the bull. And then people will start putting in their bids and will increase volume. That automatically increase the profit for the market maker to sell the market and short on everybody. Selling the market at that point can drag it down as far back as 25, as I earlier said. But that's on the shorter term. On the longer term, the outlook has not really changed. Of course, except this. So 1, 2, 3, 4, 5. Hold on a second. Yeah, I think we are where we were supposed to be originally. Yeah, the outlook has not changed. So we've topped out. We expected to top out at 31,000, 32,000 before. We topped out at almost topped out at 32,000. Now that the price has gone to negative 65 range, I expect that whether see consolidation at this point or frank reversal of price, in which case we can expect that we'll have some. Wow. If the price goes back on this trend, it will not be nice. It will probably take us back to 20,000. But if we consolidate and find support at 25, then we might begin our journey back up. Well, the outlook hasn't really changed. So this looks like an inverted head and shoulder. This is actually very sinister if you look at it the other way around. But let me see. Yeah, it's actually very, very, it's not looking nice. If you're a bear and you're looking at it from a bearish perspective. So this is one. This is one shoulder. This is another shoulder. And the top, the head is this. So based on this structure, the head and shoulder, the inverted head and shoulder is expired, meaning the beginning of the structure was here, of the pattern rather, was here, where the shoulder or the bottom of the shoulder started. So if you take this as a shoulder and take this as a shoulder and take this as a head, then this structure essentially is fully it has come full circle. Let me use that word. So what happens in the month of July is extremely critical, because if it goes up, then it means we'll flip the structure and we'll start looking at 40,000, that's 36 or 40,000 more. If it goes down, hold on a second. Let me get it. I want to get a measurement on 50% correction of this. 50% correction of this would be. So 23,000 will be 50% correction, because it's gone from here to here now. From the recent bottom, it's done 100%. Wow. So we've done 100%. I didn't even realize that. We've done 100% since January. Is it January, November? Since November, October, November last year. So it's done 100% from cycle bottom, because I think that's probably the cycle bottom. And it happens to have also coincided with the bottom of this inverted head and shoulder. On the weekly, it's also coinciding with this range. Yeah, this one. So it's also coinciding with this supply range. I think we'll come down, maybe not significantly. I think it will come down for more strength. And because it's just one candle, it's not sufficient enough to just break through. If it was one candle and it went right through it, and the next week's candle opens above 32,000 or 31.5, then we might be in for some serious, very serious movements. But we need to wait to see what next week brings out, because it might just be a situation where you have this kind of upsurge, then you have the correction coming down all the way. But next week is the last week of the month. Usually last week of the month sell-off period for the big guys. Usually first week of the month is usually like when people put in their long-term positions, like monthly positions. So it might not bode well. If we look at CME or DXY might give us another. Where is DXY? Yeah. So DXY is the dollar index. It's always an indication of where the price of Bitcoin is likely to go. That's why I always like to no, this one is not good for the price of Bitcoin. Bitcoin is going to come down, and I'll explain that shortly. So on the DXY, we have a double bottom here, which has now been followed by another smaller double bottom here. So if you took this range to a 4-hour chart, which I'll show you shortly on the DXY, it will be a double bottom. Right now on the longer time frame, so if I switch this to weekly, you see that there's actually a weekly double bottom. This one, there's a weekly double bottom on the price of here, on the price of DXY. DXY is the strength of it. In the index is the index for the strength of the dollar. So that double bottom confirms the correction of the DXY. And it also happens to be around the 50% range. So it reinforces that the dollar still has a lot of headroom to go. If you come down to the daily, what we have here is essentially a full correction. So now a full correction taking, let me plot it from here. A full correction having another impulse now is going to give us, it's going to give us probably 106 or 105 for DXY. As long as this is going up, it's not good for Bitcoin. And I'll explain. I think I've explained before, but let me just explain. Let me see what this looks like on the weekly. So yeah, it's going up on the weekly, and Bitcoin appears to be going up on the weekly as well. It doesn't usually bode well. The reason it doesn't bode well is because the dollar index is an indication of how profitable it is to hold US dollars in bonds. is a direct indication of how profitable it is to hold US dollars in bonds, because the DXY tells you how strong the dollar is. Now, on the weekly, the dollar has been raging. It seems to be recovering, as opposed to what it was just the last 3 weeks. So this week posts some significant recovery. And if you go to an intraday charts, you see that this is a confirmed double bottom here as well on the 4-hour. So this tells me that, you know, this is about to take a move. Now, the last 4 hours, of course, I've seen this drop, which has seen Bitcoin go up as well. But anytime you see a movement up this way for DXY, I know that Bitcoin is coming down. So if for anything, Bitcoin is probably going to come down, definitely going to come down over the next few days, because the next major resistance for DXY is really here, around here, and the price is not there yet. So until the price gets there, we might not see a change in the behavior in terms of the price of Bitcoin getting beyond what it is now. So my thesis is that this is going to correct. So if you take it 4 hour for 4 hour, this is going to correct, just like this DXY is attempting to correct. This is going to correct as well. The other chart I like to look at is S&P 500. S&P 500 is all the stock, the US stock index. We're usually moving side by side with S&P 500, but there's been relative decoupling in the last few days. And I think it's probably because of the ETF FOMO and the noise that's going around about it. But once that settles down and there's a lot of open interest, I talked about open interest here before. I don't want to go into details of that tonight. There's a lot of open interest on the market to buy Bitcoin. Then you see a sudden sharp drop that will wipe out all the liquidity on the long side of the trade. So I'm still, in essence, I'll still be very cautious right now with either buying Bitcoin or selling if you've already bought. Well, if you've already bought, it's a good time to sell. Let me just put it that way, because it's made some profit. But I know the last time I said we should sell and wait for it to come down. I'm still waiting. That I still believe it's going to make a good correction. After that good correction, then I think the next leg will be up on a significant upside. But right now, it's just a number of things that are still hitting up the quality and making the price go up. But considering the supply region I explained earlier on the higher time frame, which is on the weekly, I expect that there'll be some significant cooling down. It's almost invariable. This is a very huge supply zone. It was support here for how many weeks? Hold on. Time and it was supply here for 1, 2, 3. How many days? 70 days. Yeah, 5 weeks. So it was supply for 5 weeks. So it was demand for 5 weeks back in 2021. And again for 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 weeks, another 5 weeks. Actually, this was more than 5 weeks. Wait, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. It was for 10 weeks. It was for supply for 10 weeks back in 2021. For demand for 10 weeks back in 2021. Then it went for like 5 weeks before it plunged down in 2022 June, and is acting as supply now again. The price only haven't touched it significantly twice. So 2 things that are against price upward movements: this long-term supplies demand zone. 2, it's only touched it twice. The last time it touched it, it retraced for 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 weeks. So because you have that kind of retracement, it means that the supply is high at the 30, 31, 32,000 price point. So essentially, it's a note of caution. That will be my counsel for the price of Bitcoin. That a note of caution, just to watch out for how the market behaves on the back of the ETA. Again, bearing in mind what I told you about the macro and about the market makers. Market makers don't want to buy the commodities for the upper band of the markets. They want to buy it for cheap. I mean, everything in this world, why is there a problem in DRC? DRC has the largest number of mineral resources per square inch of earth in the world. And they can't just get it right because there are too many interests that are way stronger than them. They're interested in what they have and they want to get it for cheap. So there will always be crisis. I remember having a discussion with someone and the guy was saying, oh, Gaddafi was such a good guy and that people didn't realize that Gaddafi was a good guy until he died. But apparently what happened was Gaddafi was trying to create a new gold standard, essentially based on African gold. And what he wanted to do was to create an internal trading bloc within the continent so that all African countries can trade with themselves using Africa's gold and force the Europeans to trade with us based on gold. Of course, that would automatically cripple the Anglo-Saxon community, meaning, I mean, the money printing will have to stop because they'll need to look for gold, or they need to find a way of synthesizing gold to pay for crude. So they won't let that happen, of course. It didn't take long for them to take him out. They didn't have any reason to take him out. They could have imprisoned him. It didn't take long for them to take him out. So it's very important. That's why I was telling that person, like in parallel to a country like Nigeria that's very resource rich, both in human capital and raw human resources, that Nigeria needs to tread a fine line. We're talking about IMF, and the guy was, the guy was an older friend, was telling me that they're going to mess things up. They invited him. He said, well, they didn't invite him. IMF will always come when they see that there's a potential. There's a potential in an economy. They will always come to make sure that the economy is serving their own interest and not the economy's own interest. So I said, there needs to be a fine line treaded by the country, because if you go against IMF will make sure that that country gets into trouble. And I mean, I know it's in the internet, but there are evidences all over the place. So the best way for any country is to deal, how do porcupines mate carefully, as they say. So you deal with them like porcupines mates. You need to be very strategic, because otherwise the country will run into problem. So in the same way, you have a commodity like this. It's groundbreaking technology. Half of the world, what am I saying? More than half of the world doesn't understand what's really going on about it. The people that understand know what the potential capabilities are. And as a result, they've tried to use strong coercive forces to contain it. It hasn't worked on both sides, both East and West. China has tried it, US has tried it. So now they have to reverse engineer control and make sure that they can find a way to rein in the monster, quote unquote, before it sinks the economic ship of the dollar. And amidst that is the discussion on BRICS. I don't know if you guys have been following that discussion on BRICS as well, where China, Russia, South Africa, Brazil, and the likes are trying to form their own alliance. The problem with that is that US is still China's biggest customer. China will not want the yuan to become a global currency, because if the yuan is a global currency, then all the Chinese big money can escape with their money, which is something they can't do right now. And that will crash the economy of China. So it's still a long shot. I think it's still a long shot. I think in the final instance, I think what will happen is there will be a cataclysmic economic situation. I think in the next 7 years, which will be like 2030, that will force the world into a digital CBDC, central bank digital currency era, where everything will now have to go on blockchain in terms of economics. And I'm sure there'll be propositions of, either a one world currency or global, continental currencies or interbank CBDCs. There will be something that will be very similar. All the evidences on ground point to something like that happening very soon. But understand that for things like Bitcoin, because you can't shut it down. You can't arrest the MD. There is no MD for Bitcoin. There is no CEO to catch. There is nobody to jail. The developers are just developers, everybody working and supporting the network from their nodes. So you can't hold anybody down. So the best thing they can do is to join the developer community and weaken the effect of the original developers in a way that they can begin to manipulate the price of Bitcoin to a level that's controllable. Because ideally, if you were to be in a situation where Bitcoin maximalism, call it hyper Bitcoinization, if you get into an hyper Bitcoinization situation, everybody suddenly realize that this is actually solid money, this is solid store of value, and it's better than printed money. The value will just astronomically go through the roof because everybody then wants to trade in Bitcoin. Everybody wants to have Bitcoin. So they can't have that happening. And that's why you've seen that the last bull run was truncated because El Salvador went and took a deep dive on Bitcoin. And of course, IMF was there to make sure that it didn't succeed. So they are still in the throes of that decision. But because, they're a relatively small country and the guy has a grip on the country, he's still been able to maneuver. So economies the world over will not be happy to have a situation where there's something else apart from, the central bank printed legal tender that will be used as store of value. So that struggle is not going to stop. And like I say very often that, it's a revolution that's happening in slow motion before our eyes. And that's why we don't see it. We're not conscious of it because we are living in that revolution. Like I was telling a friend of mine that if Jesus Christ had come in today's world, we will probably not know that he was the one because he wouldn't have. We'll just know that there's some guy that does miracle signs and wonders. We might even have packed him as one of the fake prophets because he might not have caught the norm and he might not have really fitted our mentality of who a Messiah should be. So really, if you are living in that time, it would have been difficult for you to comprehend the magnitude of what was going on if you are living in the time of Jesus. So essentially, we are living in this time of economic revolution, but we do not realize it because we are living it day to day, and it's happening in slow motion. It's not happening like Big Bang, so we don't realize what is going on. But I'm sure in the next 50 years, people will start talking about this period, about the kind of technological advancement that happened with the involvement of digital currency and Bitcoin. So for now, I think I'm holding my guns in terms of the price of Bitcoin because the spike it looks premature and it looks strong on a weekly basis, but all the other correlated indices, the DXY, the S&P 500, they're not looking in alignment. So when you don't have an alignment, it means that something is in the offing and something about to happen. That's about that in terms of analysis of the markets. In terms of coins, somebody asked me to do a review for, I think it was JobCoin. JobChain. Oh, okay. This looks new. It is new. Can it be? Oh, okay. It's not new. 2019. Oh, it's not new, actually. This looks like a very good buy. I don't know what's pumping it, but it looks like it's in a very good buy zone. Let me check. Let me check the markets. I see. Is it a coin or token? Is an Ethereum token audited? Looks all right. Market cap is 4 million, fully diluted is 42, so there's a potential 10x. Circulating supply is quite huge though. Circulating supply 1, 2, 3, 1, 2, 3. So circulating supply is just 10% of the total supply. That might hinder the pumpamental, as they say, for that kind of a token. But I mean, it looks good from a purely tokenomics standpoint. If we looked at how far it's dropped from all-time high, 98%, that's huge. That is huge, man. That is huge. If it ever goes back, to all-time high, that's like 50x. But then it has a long way. But the interesting thing though is it's been around since 2019. So this peak was along with the peak of 2021 March. Okay, simple analysis, bam bam. If I'm going to buy this coin, just as an example, if I buy now at 0.0042, my peak sell price will be 0.002, which is it's not up to 10x, is it up to 10x? Yeah, 5x maybe. Double zeros, triple zero. Okay. Almost 10x from current price. But it's one of those. The problem with this is if you buy it on spot, so let's say you buy it on Finex, you only be able to profit from the gains if you have a pending order to sell it at a particular price point, which is why what I said last week about documenting your coins and managing your portfolio. If you buy this on a spot exchange, just make sure that you set up a pending order to sell at a particular price, not too high, maybe like 5x or 10x, because you never know. Really, you never know. There's a huge liquidity pool of unpublished tokens. So if the owners, I don't know what the distribution is. Let me see if we can get it. If the distribution is such that the owners, the token contracts holders, let me see. Yeah. Top 3 holders own 70% of the token. Top 4 holders own 85% of the token. So these guys have serious capacity to dump. So you need to be careful. That's what I would say. For this kind of token, you need to be careful because this is a very large percentage of token being held by probably the founders' tokens or probably the developers. Major. This is major, like 25%. This belongs to the same parties. These two, the 50% belongs to the same party. So I won't bet a lot here. It will definitely not get to this price again. Except, of course, Bitcoin does, except Ethereum does something crazy. If Ethereum does something crazy, then we'll probably see this price again. But other than that, I'll be shooting for like half of that, which is like somewhere around here. Yeah, I'll be shooting at like half of that. Pulse Chain. I think Pulse Chain is not listed anywhere. I mean, X is the one that is listed, and the Pulse chain is still very new. Somebody's asking a question: is Pulse chain listed on any exchange? I don't think so. I don't think so. Pulse chain. It's possible that they've listed it on some exchange, but the whole idea was trying to drive traffic to Pulse X, the decentralized exchange for Pulse chain. What's the notion? Okay, it's moving now. Can't see any. Okay, it is on OKX. It is on, I don't know the safe trade. I don't know Quantiger. Okay, these are all Asian. These are all Asian / Eastern European exchanges. So it is on OKX. Sorry, Albert, but I know that it wasn't available originally. It was only available on Pulse X. So, but it's obviously on OCX selling at PLS USDT. I don't know this exchange safe trade, and I don't know. I know Cointiger. Cointiger is Chinese, I think, or Chinese or Japan, Korean. Asbit is new. ZT, I think I've seen ZT before somewhere. Anyways, it's on OKX. OKX is a big market player. Of course, it's not going to, for the guys in the US, you never see Pulse trade because the guy is a US citizen. Or I'm not sure that he's a US citizen, but the guy used to be in the US. So you probably not see that. My thoughts about Sui from Miston Labs. There are too many, honestly, there are too many tokens now. They're probably like 100,000. It doesn't make sense anymore. Jobs too many, like crazy tokens. This one is currently 77. It's almost 500 million. When did it start? Yeah, this one is not. It has not gotten to the bottom yet, in my opinion. I don't think the Sui token has gotten to the bottom yet, in my opinion. Yeah, it's just it just got listed less than a month ago. Well, barely over a month. It's too early days, way too early days. So there are two ways to play this, just for people who are curious. So if you want to be an early adopter, you will have bought here at the 7th of May. By now, you're underwater by almost 40%. So, or here, potential is a double bottom. But because I'm still waiting to see what Bitcoin plays out, because if Bitcoin takes a nosedive for any reason, any token that you bought will take a hit. Any token will take a hit, except it's a token that is actively being pumped, like, Pulse Chain's token. Any token will take a hit. So this is not, I won't suggest getting it now. They all have very huge total supplies. This one is 10 billion. And circulating supply is 604. It's not even one, it's not even up to 10% circulating supply. Interesting. It would be nice to see. It would be nice to see this, because it looks like they've gone and created their own chain. Yeah, they created their own chain. Borrow supply is what 8 billion. Yeah, they created a chain. Interesting. I'll find out more about them, but I don't think I don't think it's gotten to the bottom yet. So one of the guys behind it introduced it to blockchain, Bitcoin in 2013. They were part of group behind Libra. Oh, the Facebook guys, I see. Okay. I will take a look at it. This is the first time I'm seeing it. If he has strong connections in Silicon Valley, there will be a serious pump during the bull run. But for now, I'll wait. I think, yeah, this looks like initial transactions that they're still trying to run on the chain. Interesting. Interesting. So they have, it's actually they have a number of tokens already that's sitting on the chain. I'll research it. Yeah, I see that it's layer one. I'll research it over the coming week and look into what they're doing. And it's quite clean. Yeah. So it's proof of stake as well. It looks like it's a proof of stake chain. Interesting. Top accounts. Let me see what the top accounts look like. Let's see. Interesting. Not bad. It doesn't look bad. I think this one might pump actually, because I'm seeing major exchanges accounts there. So top accounts, I could see Binance one, I could see what those means actually are the biggest holders of the token. Oh, they have to go from them. Okay. You seem to have a lot of information on them. Well, if they have funding rounds, they're good to go. Just like I was saying about Solana 2 years ago, that I think Solana will outlast the bear market and will eventually pump in the coming bull run. So it looks like a good one. I thought it was a token originally until I saw this. So that changes the dynamics significantly. Yes, I'll add it to my watch list as well. It would be nice to watch out. Everybody should watch out for this token, actually. 80 cents. And the problem I have is that the maximum supply, but I'll leave that. It will be interesting to see how the new tokens are minted. It will be very interesting to see that. I'll note it down, but let me write it on my list of tokens to watch out for. Sweet. So it's not just them in terms of the token itself, but also the coin itself. It's not just the coin itself, but also the tokens that are going to be launching on that platform. Should be interesting to know specific kinds. Object centric based on programming. Should be interesting to take a look at this. Yeah, it looks quite interesting. The last time I was into any chain at all was Zilliqa. Yeah, I think that was Zilliqa in 2019, 2020, when they came up with the shard technology. Yeah, interesting. Well, they have funding, so yes, there's something to watch out for. Why do I say that? If a project has funding, they have a lot of capital runway to market their projects and make a lot of noise. That noise, whether you like it or not, is just like in real world. It has impact, and what it does, it draws attention to the project, and as a result of that, people eventually get to know about the project, want to buy the token, and that drives up demand. So yeah, will be interesting to look at this. I have a very tight next week, but I'll look at it. Yeah, something for everybody to take a look at as well. Sui, not just Sui. There's another one I saw there called Mist Coins. Where is it? Yeah. I think I saw Move. I saw Mist. So, but that Sui itself is the layer one on which all these ones are based. So, if it pumps, all these other guys will follow. Just like if if Ethereum pumps, usually you will see all the other Ethereum-based token pumping. So if this pumps, I think all this will definitely pump. I'll copy the. Yeah. Yeah, I know that it's the coding language, but I also saw that it has a token. So it might be that it's the fees that is being used for. It's the fee that's being used when you want to maybe like mint or don't want to do stuff like that. Yeah, very, very good call. Thank you very much, AK Mati, for that call on the point. I think it's a good one. Objectively, I think it's a good one. Is there any other person's question I've not covered? I think I've covered everybody. Yeah, I think I've covered everybody's questions. Thank you very much. Thank you very much, everybody on the call. Thank you very much, everybody on Instagram. Hopefully, I'll see you next week. If I have space to do the live. Take care and God bless. Have a nice weekend, everyone.
Thank you.
Bye.
Bye.
Thank you, Doc.